What's up, guys? Welcome to another episode of the DJ Radio podcast. There's some time that I don't show up here for a pod, but I can assure you it's gonna be worth the wait. Today, I had a great conversation with Guy Young, founder and CEO of Ethena Labs, and we covered a lot of things, everything Ethena, and all their new products that are coming, the ecosystem they're building, and a lot of things. We discussed a lot of things about tokenomics, what they're doing different, and their new chain, Converge, and many more stuff. So, enough of me talking, let's come into the show. Hey, Guy, bem-vindo. And how you doing? And before we start, can you introduce yourself, talk a little bit about your background, and why did you choose to start Ethena?
Yeah, for sure. Well, thanks for having me on. And I don't think many people know, but I'm half Brazilian actually, and I think we spoke about it when we met in person. So my mom's from
Yeah.
Brazil, Portuguese mais ou menos, but obviously nice to speak to everyone on your listeners. So yeah, I think my background before Athena, I was working at a hedge fund for about 6 years, and we were looking at investing into financial services businesses. Had been involved in crypto since the last cycle, and then decided to make the jump at the bottom of the bear market just after Luna collapsed last cycle. And yeah, the idea behind Athena, for those of you that don't know, is what we call a synthetic dollar. So you're essentially creating something that looks and feels a little bit like a stable coin, but has a very different, mechanism that sort of sits in the background in terms of its collateral and then the return that you can generate from the stable. And yeah, it came out to market around 15, 16 months ago now with the product, and scaled from 0 to just under 10 billion now, which has been the fastest growing dollar that we've ever seen within crypto. And yeah, have a bunch of different directions and products that we're sort of coming out with after USDe, and happy to talk through all of those on the chat. Yeah.
Cool, man. Cool. Yeah, it's like in stellar growth, like to 10 billion. Who would thought like in so that short span of time you guys would grow like so fast? Did you imagine that?
Not really, to be honest. In my mind, I kind of thought it could get to like 5 bill over 3 years or 4 years, and then I think crypto kind of has a long history of sort of surprising you in terms of how high things can go, but then also how low they can go as well at the same time. And so, I thought we'd get to the size eventually over some period of time, but I didn't think it would be happening in under 2 years. So, yeah, I think a good confluence of different events when it came to like luck, market conditions, all these different pieces. But obviously pretty pleased in terms of where we ended up since the launch. Yeah.
Yeah. Also execution. You guys are like executing like in insane level. Like I think like Ethena and Hyperliquid are like both like top two projects in terms of execution by looking from outside. It's like that. Just congratulations for that, man.
Thank you.
And And going, let's start on your flagship product, USDe. Like you just said, you're at almost $10 billion right now, and you grew like 73% in July from like 5.33 bill to 9.26 bill. Like when I took the data on Monday, I think, or Tuesday, so it probably grew larger right now. And the first question I want to ask you is like, if the derivatives market it remains the same size as it is today for the foreseeable future, like what would be like the cap on scalability for USDE and
Yeah.
in for you to keep paying like a competitive yield on as USD?
Yeah. We sort of think about it as a percentage of like open interest in the market. So right now there's roughly 110, $120 billion of open interest across like all derivatives in crypto. And right now, Athena represents, less than 10% of what's sitting there right now. We think like a broad, rough ceiling for where we could grow relative to the size of that whole market is somewhere in the range of around 25% of the total market. So I think USDE, even back in December, if we had done our jobs properly in terms of integrating it in the right distribution channels, we should have been at like 20 bill basically when rates were at like 30% back in December last year when Trump had just come in. So yeah, that's sort of the rough framework in terms of how we think about market sizing. The one thing I would just say is that what we've observed like last cycle, but then also the beginning of the cycle was the derivative market tends to grow at a quicker speed than the market caps themselves or like the underlying assets. So if we just look at Bitcoin at the beginning of 2024, it was roughly $50,000 a coin. And then the open interest for Bitcoin was actually a third of the size that it is right now. So when Bitcoin doubled we actually saw open interest in derivative markets triple in the same period of time. So it's an interesting idea that like the addressable market and sort of size of market that Ethena can capture is like non-linear with respect to the growth of the underlying market caps. And it just means that we can, the addressable market can grow quicker than the asset prices themselves. Yeah.
That's interesting. Yeah, and 25%, it's like higher than I was expecting. I was expecting you going to say like 10 to 15%, but just from my mind, didn't have any number, so that's impressive. And what, like, in this recent stage of growth, like, just went insane last month? What are the main reasons you attribute for that? Do you believe there's a direct influence from the Genius Act approval?
Yeah, I think the Genius had a little bit less to do with it, if I'm being completely honest. I think I'm interested in your view on this as well, but I think there's a slightly different perception of risk with Ethena now versus where we were maybe a year ago. I think when we first came out, everyone thought there was this weird mechanism. Is this the next Luna? It was kind of like that was the general sort of vibes. And I think we've sort of been through enough, market corrections now and like black swan events like we had with Bybit, I think at the beginning of the year, where I think people are just more trusting of like the design, and then us as a team being able to responsibly sort of manage, the entire sort of backing that sits behind USDe. And so like what that means is downstream, people don't need like 15, 20, 25% yield like they used to get in USDe when we first launched to still find the product attractive on a risk adjusted basis. Yeah. And so what we find now is that when rates go even a little bit above treasuries at like 7, 8, 9%, there's just so much money that's waiting on the sideline to come in and get access to it. So I think a big piece of it is like perception of risk has come down. And then when rates do come back to the market, they sort of bounce to 10 to 12%. And we added like 4 bill of supply in like a few weeks, which is just a mind-boggling idea because it's more than we added in the first like 9 months of Ethena existing. And we had rates that were like at 60% during that period of time. So I think it's going to get pretty crazy if we see like a rerun of one of those events where funding blows out to like 20 or 30% like again. I think it's going to be pretty wild this time because you've just seen the sensitivity of how much money can flow in with even a small spread to T-bills. Yeah.
Yeah, it's crazy. And besides Bybit, there was like a few big leveraging events in the industry, and you guys just like performed like pretty smoothly. So I think this is like impacts too. And on rates at 60%, do you think we still can get to these insane levels, even with like you guys and other players trying to compete with you guys that's way smaller but still put more like short pressure on open interest? Do you think we can get to like some 50%? Because in Bitcoin we topped at 38% in December versus like 70% in March or April versus 112% in 2021. So do you think we can still get to 40, 50, 60% in BTC and ETH?
Yeah, no, I think it's a good point. And obviously these things are going to come down through time as more and more capital is chasing it, and it's sort of industrialized in the way that people are accessing the yield. And Ethena is obviously a big part of that. The funny thing about it is that like before we were coming into this cycle, people said that you'd never ever see the funding rates that we saw back in 2021. This is before all the ETFs and stuff came out. And I remember we were pitching Ethena and they're like, this is the stupidest idea I've ever heard. Like there's professionals in the space now. There's no way that this is going to be an attractive yield. There's too much money chasing it. And then literally 1 month later, funding went to like 60 to 80% basically for 3 months. I think the thing is that you can never like identify what is that catalyst that is going to drive something like that. And ultimately it's like a catalyst that's so big that everyone within crypto feels that they need to be long more than 1x their net worth during that period of time. I think it would take something pretty big if you're going to see that happen. I think a headline like the US government is actually going out and buying Bitcoin, or Saudi Arabia needs to buy whatever 50 billion, 100 billion of Bitcoin. I think it's that kind of like level of headline that you need now, where people are going to look at it in the same way that you did with ETFs, where there's just a very obvious flow of spot that's going to be coming that you want to front run. But I don't think that it's possible to sort of sustain near those levels just given the amount of capital that's chasing it now. And you'd kind of need like a nation state, I think, interest in Bitcoin for that kind of reaction in the derivative market. Yeah.
Maybe Tom Lee buying 5% of ETH and Joe Lubin fighting him to get another 5% can help us get there with ETH. But yeah, I agree with you.
Yeah.
And regarding like the growth coming back, you at Ethena, Pendle, and Aave seems to have like a real like symbiotic relationship right now with the since the PT was listed on Aave as collateral, and if I recall correctly, close to $5 billion in USDe or in Aave, right? Something around that, and that you Ethena grew and Pendle pools grew and Aave pools also grew. How big is the impact of this relationship between you three? Do you think is responsible for part of the success in the protocol, especially Ethena, of course?
Yeah, no, I think it's huge. I think to me, this is one of the best examples of like the DeFi money Lego sort of thesis coming together. You've just got three different projects who do completely different things. Their product sets are just coming together in such a cool and interesting way. And then you create a new product that didn't exist before that really you can't recreate anywhere else. I mean, like literally what's happening there by pulling together bases from an exchange, swapping into fixed rates, and then levering it up in a permissionless money market. It's like one of the few examples that you can show to someone in TradFi and say, like, you literally cannot recreate this kind of product experience or like outcome in the real world. And I think that's actually the cool pieces of DeFi is when you bring all these things together and make net new things that just aren't possible outside of it. But yeah, I think to your question, I think this is a market that can get so much bigger than it actually is right now. Like, honestly, when they're increasing the caps on the PTs within Aave now, people are actually sniping the stuff with Mev bot to get in. And it's like a pretty good sign of product market fit when people are botting to get into the
for sure
product that you're providing. So I think that's just a demonstration that actually the demand for this is like much higher than what you're seeing right now. We're just trying to roll it out in a slow and controlled way, and like Aave is pretty conscious when it comes to the risk side. So before we take that market at $10 billion just by itself, it's just being done in a slow and progressive way as we do that.
Yeah, it's cool, man. It's insane, and this money Lego thing is what attracted me. I got in the market like deep in DeFi summer, and this was what got my attention. I was like, it can make my life better. It facilitates money and all the stuff, and seeing this playing out like in large scale is kind of crazy, like in a 5 years time horizon.
100%. Yeah, I mean, back in DeFi summer, you had like Wi-Fi, synthetics, curve, all of these things that are coming together. And I think we lost a bit of the magic of that in the last 4 or 5 years, where you didn't really see much of that like resurface since last cycle. So I agree, it was one of the pieces that sort of made me the happiest around what we're doing with Ethena was actually even using it myself and kind of trying to bring back a bit of what we had in the last DeFi summer. Yeah.
Cool, man. And coming back to the Genius Act, and do you think like the no yield on stablecoins can harm your product anyways, or I'm misinterpreting something here?
Yeah, so that kind of applies more to the payment stablecoin classification, which you can think of as like super clean T-bills just sitting in a SPV, circle tether type of design. Even those stables don't actually even like qualify in their current form right now. We sort of view it as like, if you're wanting to interact with your product with the highest level of financial institution in the world, like GSIBs, payment companies, they're going to require that as like an entry level to be able to engage. It's not like it's illegal to have different products. It's just that that's a rubber stamp of approval that I think the absolute top tier of institutions are going to need to interact. And so I think it's really like a product and distribution question, which is that the end user that you're actually trying to address with your product or not? And if it's not, which is the case with USDe, like USDe right now is not available in the US for retail users. We have like an institutional product, which is just delivered in a much different format. And then most of actually the demand sits outside of the US for USDe and like in DeFi use cases and CeFi. So for us, it was really like the end user and the customer base that we're trying to face off to. We're not really trying to compete with the PayPal and the Circle for like payment stablecoin type use cases. We're happy sort of leaving that to them and then focusing on the areas that we think we can do better. Yeah.
Oh, got it. And to close it out on the USDe part, and I saw you tweeted, I think it was this week or last week, that for each dollar grew that USDe grows, USDT grows 0.70 cents. And so there's also kind of like a mutualistic relationship, but and how do you envision the competition with like these two juggernauts, that Circle and Tether, especially Tether, in the market? Do you aim to compete with them in like USDe versus USDT, USDC, or just see as separate things?
Yeah, we view Tether more as like partners than competitors, if we're being honest. Like as you said, the growth of our product is extremely beneficial to them, and like really, you can actually think about Athena's product is actually just a yield-bearing version of Tether, because a lot of people use Tether to basically recreate what Athena's doing by themselves. They just didn't turn it into like a new token and new product. So we have a very good relationship with the Tether team, interact with them on like a weekly basis, and yeah, definitely don't. I just see it as very distinct and different products, like serving different types of users. I think with Circle it's slightly different because Circle does share quite a lot of the income and yield of their product, but just kind of in slightly hidden ways, whether it's like with Coinbase or like some exchange relationship or whatever it is. And if we're going head to head to compete on that axis, which is sort of like sharing some of the income as a savings tool and that kind of stuff, ultimately that is going to be quite competitive. I think the view that we have though is that user behavior within crypto kind of tends to the extremes in some ways, where you either want the most liquid and the most clean and the most simple to understand, or you want the thing that's like high yield and giving you all of the juice and stuff like that. And there's this kind of like middle ground of no man's land where like a little bit of yield, but then not really liquid and a bit like, clunky to move around to different exchanges. I'm not convinced that actually is like the winning strategy, where I think people just want one of the two options that are sitting in the extremes, and like the middle is kind of a bit not that interesting. So yeah, I think the view that we have is that we can dominate that end of the spectrum, and we have a better product for that. And we will compete with Circle and USDC as we sort of like start to encroach more and more in each other's worlds. Yeah.
I completely agree, man. All right. And now moving on from USDe, like you said before, when you launched it, there was like some people saying that it could be the next Luna, despite the mechanism being like completely different. And it's not going to scale. It's going to keep like small. People know is not interested in this stuff. And now you grew like you're the fastest growing DeFi protocol ever, and the breakout app of the cycle alongside Hyperliquid, and you're just quote unquote a synthetic dollar with the highest and most reflexive yield in the market. And now you're building a whole ecosystem of products. And can you comment a little bit more on what are you excited about in the product suite of Ethena that's coming out, that's already live? Can you talk a little bit more about it?
Yeah, so I think we're actually very early in like the story and the life cycle of like Athena's shift, I guess, from like a single product into more of a platform that is enabling other people to build cool and interesting products on our core product. I think this is like a journey that any meaningful platform or project in the space goes through time, which is like you want to move away from just having reliance on a single product and actually allow other teams to compound like innovation on top of that and build net new things. I think the pretty simple view that we have here is that all of DeFi kind of runs on dollars, right? Whether it's leverage within money markets, the pair that you're trading within AMMs, the collateral that you're using on derivative dexes, and when you add a structurally higher return to the dollars, it just makes all of these apps better, basically, whether it's like slicing and dicing the yield, fixed to floating interest rate swaps, all of these different things are basically elevated to the next level when you're running them on USDe rather than another stablecoin. And so, yeah, I think all of the primitives that you see within DeFi, there are new and interesting ways that you can sort of build better products, we think, on top of USDe, given that. So there's a few different projects that are coming to market. So there's like a perp DEX called Ethereal that sort of like has native yield bearing collateral when you're trading throughout the entire exchange. I think that's a pretty exciting idea. And I think perps and kind of like dollar with a yield are kind of the two killer products of crypto put together in the same place. We have other interesting protocols which are doing basically like securitization of USDe. So you can kind of think about splitting up the risk like you see within TradFi on like mortgage-backed securities and those type of things, where you're basically apportioning the risk to different investors that have different risk appetite for different returns. And I think that's a very cool market, which again is extremely like early. It reminds me a little bit of Pendle when Pendle first came out and everyone's like, oh, there's this weird like yield trading thing. Everyone kind of ignored it for a year. And then it obviously grew up to be a pretty important piece of infrastructure through DeFi. So yeah, I think there's a bunch of these different apps. And we've got a pretty cool sort of like flywheel in the way that they interact with Ethena, which is like most of these apps that are coming to market tend to have some sort of airdrop of their token coming back to Ethena and, are obviously using USDe within their product set. So we want to continue sort of supporting these ideas and allowing new teams to come and compound on what we built already. Yeah.
Well, cool, man. Can you name a little some of these projects, or still itself?
Yeah, so there's like Ethereal, Derive was one that was based on options and using a lot of USDe in their product set. There's Strata, which is doing the securitization type stuff that I mentioned. There's another one called Terminal, which is doing like basically DEX. DEX is paired with like interest-bearing stables. So yeah, those are the main ones. And then one other piece that's coming out, which I think is pretty interesting, but it's pretty early stages, is like what's going on with HIP3 on Hyperliquid at the moment. So one cool idea that you can sort of play around there is that it allows you to permissionlessly bootstrap new markets. And what could be interesting to us there is that you can redenominate the whole of Hyperliquid from USDC into USDe, where when you're trading on Hyperliquid now, there's no way to get yield on your collateral while you're doing that. And so there are some teams who are sort of interested in terms of picking up USDe, forking the whole of Hyperliquid basically to the side, and allowing people to just migrate in one click from USDC into USDe pairs on Hyperliquid. And there's a lot of cool things that you can build around that, like HLP with USDe, so you get like two forms of yield within HLP, all these different things that sort of like get added on top when you're using USDe. So I think that's one area that we're pretty excited about, because I think the upside to doing the PAP DEX well, like you can see with Hyperliquid, is extremely large. Yeah.
That's very interesting. And all these teams, like these projects building, you guys are building all of this in-house, or just like adjacent teams that are building and you are like kind of helping them and advising them on how to build it?
Yeah, that's exactly right. Like we have a few people in the team who are just helping on the ecosystem side and are helpful support to these external teams. But yeah, we need to be focused on kind of doing our job correctly and making sure that that's done properly, and allowing these external teams to come on. I think it's kind of similar if you think about Eigenlayer in terms of like AVSs that are building on their product, or Hyperliquid's got a bunch of teams like building on their exchange, or just an L1 that's sort of supporting people that are building on top of them. All of these projects and ideas, we've got like a philosophy inside of Ethena that we'll never launch like another token internally. Like all of the products that we're doing are just behind Ethena, and we're not going to ever try use the same team to generate another token and sort of distract away from Ethena itself.
Yeah, it's cool, man. Got it. And seeing you talking about like some products that came from TradFi, like the Strata, that concepts came from TradFi, and I see you guys are like doing a lot of like things, like looking to the institutional side more than the DeFi DG stuff that we get like with the PT looping. I think we probably have institutions doing this too, but we also have like you guys bringing like the IUSD, correct?
Yeah.
And there's USDTB, the partnership with Securitize. And how are you like seeing like this dynamic? You're going focusing more in this direction. You have your team like with like two fronts, like one more like DeFi native and one more institutional side. How are you playing this the situation?
Yeah, no, it's exactly right. I think it's one of the cool things about the product is that it kind of appeals to everyone, right? You can be a retail user sitting in Brazil, or you can be like a hedge fund sitting in New York, and like $1 with an interesting yield is something that kind of appeals to everyone. I think the structure internally is we do have like different teams that are focusing on BD and sort of sales within two different segments, because it's not the same thing pitching to people within DeFi as it is with these institutions. But yeah, I think the piece that makes it slightly more challenging, I think it's just like the time it takes to get people comfortable, like with true institution to operate with like enormous scale, is just not on the timelines and like speed that we get things done in crypto. So I think my perspective on it now is that the stuff in DeFi right now is like humming very well. It's just working, everything's kind of going smoothly, and it doesn't take a lot of focus and attention from us to continue sort of growing with the existing channels that we have in DeFi, while some of the stuff that's sort of going on in the background is much more of like a slow burning process for some of this institutional stuff. And I wish it could happen sooner, but it's just a slightly painful process where it just takes months to get people sort of up to speed and comfortable with what we're doing. Yeah.
Got it. So now staying on the institutional part, going to the Converge, you guys are building a chain right now in partnership with Securitize. And we chatted a little bit about this in person, but like, why did you choose to build a chain and instead of just staying on the stablecoin synthetic dollar business? Why this? It's not a pivot, but why this expansion?
Yeah. So I think for us, it was really about trying to find different distribution channels, as you said, to some of these TradFi entities. And I think a lot of the ecosystem building that you're doing becomes a lot easier with people when you're just concentrating it in one spot, if that makes sense. So to be able to take our product set and say, if you are an app and you're wanting to come and do, build on Ethena and actually grow these products, it's much easier to sort of like grow a community and the ecosystem around that stuff when it's all, shared under the same sort of brand and behind the same identity. So I think that's a big piece, which is, I don't know, I think there are many negative things around Luna, but I think one thing that they actually did very well was kind of like identify that they had one core product and then go and find all these different use cases and different apps that could actually build on top of that core product on their own chain and sort of like drive it forward in terms of adoption. So I think there were some learnings there which we thought were worth taking seriously, and being able to do that basically within your own chain where you can actually really focus on those apps rather than having them like someone ETH, someone Solana, some sitting all over the place, was a way that we thought was an interesting way to sort of drive the ecosystem forward. Yeah.
Okay, got it. And can you comment a little bit on the architecture you chose? You don't need to like go very deep into it. And how and why did you choose this path?
Yeah, for sure. So it's built on Arbitrum stack. I think it's pretty clear to us that kind of Arbitrum is like where a lot of people are wanting to get to over time, and that was exactly how it was sort of like built out of the box. So whether it was extremely short block times, they're already operating at like 100 milliseconds at the moment, when a lot of other chains are sort of trying to catch up to that level, with a lot of sort of like patchwork solutions. And then I think the key piece for us was like EVM was absolutely required, because that's just the bulk of where all of our assets are sitting right now and users. And I think to take a risk to go to a different EVM was something that we're not willing to do. We did get a bit of questions around like, why was this not an L1? Why are you doing this as an L2? And when we made the decision, it felt like peak sort of cynicism or like skepticism around L2s in general, in terms of just like, oh God, like another one of these. But I think if you stop thinking about these things in terms of narratives, which is like, L1s are worth more or whatever it is, and if you want to get a premium, you have to do it as an L1. If you kind of take that out of your mind and just say, what is the rational decision to make if you're a business just trying to get like the best product and user-driven outcome here? I do actually think L2s are like the solution there, which is you can run them more cost effectively without having to inflate your token to like a validator set, and your ability to actually customize the performance is massively increased. And so if you look at like a Mega ETH, for example, that's how you like absolutely max out the performance. It like strictly has to be something that looks and feels like an L2 with a centralized sequencer. So yeah, it was like a product tech led decision rather than one of us trying to chase narratives, which we thought were like fleeting at the time. Yeah.
Got it. Thank you. And I think people look for L1s for premiums because they don't have product market fit most times. So when you already have it and you already have it like a revenue generating protocol, it's it's easier to choose like the best like pragmatic approach to build it. And regarding ecosystem, you mentioned all of these like Strata, Ethereum, Terminal. All these guys are building on Converge, or they're building on other chains using like USDe.
Most of them are on Converge, but then there are others there are a couple that are sitting on Solana, and then one or two who are on ETH as well. But yeah, we don't want to be too restrictive around it, because one risk that you run into is like if you're forcing people to come into the chain, but there's still a good team that you want to build on your product and help grow it. You don't want to be too restrictive around that kind of thing to kind of force an outcome on that side. So yeah, the way that we interact here is saying like, if this sort of suits your needs, you can come and do that where we're building. If not, understand it, but we still want to work together if you're wanting to use USD. Yeah.
Oh, cool. And man, if I'm building an app right now, why would I choose like to build on Converge instead of Ethereum, Hyperliquid, or even like Plasma? I don't know if you see these in the future competitors. And why Converge?
Yeah, so I think Athena's already, the cool thing is you've already got like an extremely active user base that's around Athena's core product. It's not like when a new chain is coming to market, there's sort of like, it's a slightly arrogant position to sort of say like, come build on my platform. I have no experience building apps. I have no experience like scaling anything to like hundreds of thousands of users or millions of users, but like you come and build on my platform. I've always found it a slightly like insane like position to take when you've got like nothing and you sort of produce nothing. So I think the approach that we had was we've got users, we've got like an extremely active like LP base. And as you can kind of see it actually, even with the launch of Ethereal, when Ethereal came out, no one knew who that was. We kind of endorsed it, and then $1 billion went into Ethereal like a week later. I think that's just kind of evidence of like our user base just being so confident in like the products that we stamp our like brand and try and push forward in the approval on it, that it like really does drive outcomes, I think, for the other apps that want to come build with us. So I think that that's kind of the reason people would want to come build here, is we've got one of the largest sort of like active DeFi communities and LP bases in the whole space. And you're working with a team that's actually done what you're trying to do, which is scale an app in the last 2 years to a successful outcome, where a lot of people who are sort of giving you advice of how to do that have never scaled anything in their life. So yeah.
Yeah, it makes sense. It's just a great answer. And do you already have a date for mainnet? If you can comment, of course.
Yeah, it's going to be towards the end of this year, but we haven't got a more defined date than that. Yeah.
All right. Thank you. Can you like comment if it's Q3 or Q4, or you cannot comment? That's okay.
Yeah, I would say in Q4. Yeah, not Q4. Potentially not towards the end of it, but yeah, in Q4.
All right. It's just my job to ask. And now moving on to the token side, I think you guys did a lot of interesting things with the token, especially like right now we're having like this big debates in like equity holders against token holders, and forgive my French, but token holders getting screwed every now and then. And you are doing something different. At first, like from someone on the outside, I saw a lot of people saying like a few months ago, like I love what Ethena is doing, but I don't want to be the token. I don't want to buy it. It's just traders, it's in traders token. I don't want to buy it because there's a lot of unlocks, there's airdrops coming. And recently, like a week or two ago, you guys announced Stablecoin X, like in a treasury company. And I don't know if you guys were involved in the design too, but it was a pretty cool flywheel in this, where you're creating value to token holders, what's very rare in crypto. And before going to the deal structure, how do you see this thing that I just mentioned, and the conflict of interest between the token holders and the equity holders? And like, do you see a path for it to stop in like the foreseeable future?
Yeah, so I think I kind of share the negativity around when you see those different structures where people are trying to take cash flow to the equity and then kind of leave the token hanging, doing nothing. We've made very clear for like a very long time that like the equity of Ethena Labs has not received a single dollar of cash flow from the protocol ever in its life, and it never will. All of the cash flow that's been produced by Ethena has either gone to the reserve fund, to holders of SUSD, or then a potential fee switch that's coming after we sort of hit a few different milestones. We've returned over $450 million of cash into users' hands through using USDe in like just over 15 months. So I would say that we don't sit on that sort of spectrum of like trying to extract value to an equity co and sort of leaving the token on the side. We've just tried to explain that like different businesses are at different periods of their growth cycle, where it might not make sense at our stage when we think that we can double or triple the size of Ethena to be trying to capture as much value as we can back to the token right now. That's been a painful thing to go through, because I think the market always wants quick answers and quick solutions to like, give me the fee switch now type thing, even if I don't think that's the right thing to be doing in the long term. For
very short-term oriented, right?
Yeah, exactly. And I could have done a better job communicating what I've just said to you there to the market, because it hasn't been abundantly clear. And I think people just perceive this as they don't give a shit about the token and that type of stuff. And part of what the cool thing about Stablecoin X was, and it allowed us to be able to demonstrate, was that we really do care about the token, because we just raised like $260 million to buy 8% of the circulating supply. And most of these deals that you're seeing coming to market, there's some sort of like OTC in the background, or it's just like VCs putting in locked tokens into these vehicles and then using it as extra liquidity. We completely changed it. Like, it was completely out of market what we did, which was saying like, you're going to give us the cash now, and we announced to the market we're going to come buy 8% of the supply in a very short period of time. And I hope that demonstrates to people that while we're still going through this maturity phase where we want to scale to 20, 30, $40 billion, and we don't want to be, buying back as much as possible right now, we did want to show people that we cared, and we really care about this thing going up. And I hope that message came across with the Stablecoin X space.
Yeah, I think everybody that has doubts about it after the deal was announced, they didn't like they removed the doubt. And yeah, this is like pretty that you mentioned. I see a lot of people say, no, I don't buy tokens that don't have cash flows. but like in crypto, everything, almost everything right now, but 2 years ago, everything was like venture stage startups,
Exactly.
and like
Yeah.
people went to growth stage startups to like distribute revenue, and it was like this is gonna kill the project in like a couple years probably. So, but they always what they want number to go up fast, and yeah, this is like I can imagine in like how does this like mess with the day-to-day operation of a company? Do you see like this messing with like a lot of people came to you or to the team that talking silly things regarding this, or just like that thing that you mentioned that people think you don't care or something like that?
Yeah, no, we definitely see the negative sentiment, and I've made many mistakes when it comes to the fundraising with Athena. We raised way too much from VCs at like the wrong price, and like we paid the price for that this year with some of the price action around the unlocks. And I need to sort out the mess that we sort of created over the last couple of years, and part of what we're trying to do with stablecoin X and other things that look like that is resolving some of those pieces. But yeah, we obviously see the negative comments around the buybacks and all that sort of stuff, and I think there's a very fine line to walk here, which is you need to have confidence sometimes as like a founder in a team to say, I fundamentally think this is the right thing to do for the long-term sort of like outcome here, and sometimes ignore some of that pressure. But equally, you also need to listen to what people are saying, because if you're completely ignorant and just going like, you guys don't know what you're talking about, I know best, and we're going to run it my way, people don't respond very well to that either. So the middle ground that we're trying to find here is like trying to show people in different ways that we agree with them and want to concede in some ways to showing that we do care about the token a lot, but then equally sort of sticking to what we think is the right long-term solution. And I think with most of these things, there's a solution somewhere in the middle that makes sense.
Yeah, I agree, man. I agree. And can you explain a little bit on the deal with the stablecoin X? They're buying from the Athena's treasury and from the foundation's treasury, and there's a threshold I don't remember exactly. And can you just comment a little bit for the people that's not familiar with it yet?
Yeah, for sure. So all that happened was 260 mil of cash came from investors. They bought locked tokens from the foundation. So these are tokens that had not been invested, and they remain locked within the vehicle. And then the foundation got the 260 mil of cash and then just started bidding the token roughly $5 million roughly per day. So the cool thing about that is that the foundation also has a veto right of sales of the tokens in the vehicle. So you've got kind of 260 mil that's come through, has come onto the spot market to buy the token, but then the foundation can also tell the vehicle, we don't want you to sell like later down the line, which is a pretty cool dynamic where it's almost like a black hole for tokens going in one direction. You're getting the spot bids that come through, and then the tokens don't leave the vehicle afterwards. So it's a pretty cool dynamic, I think, to help some of the flows issues that we see within altcoins more generally now.
Yeah, it's like a structural bidder without the structural selling that most altcoins have. And what can go wrong with this? And what are the risks involved in the stablecoin X deal?
Yeah, I think so. There's no leverage or anything within the vehicle, which I think is very important. You shouldn't be putting like the capital structure that you see with Michael Saylor's vehicle should not be applied to altcoins, and I hope that's like obvious to most people. But there's a risk for investors who are coming in that this could trade below NAV because the assets that are sitting in there are locked and not perfectly liquid, and there might be a situation where it might trade below 1. But I think it's more of like an investing financial risk, which is like you're investing into this thing. Sometimes you lose money. There's nothing like that unique about that piece. So yeah, I think that's probably the risk here, which is if you're not doing your diligence to work out like an appropriate level to buy in relative to NAV, you might see at some point in time some sort of discount come through there.
Oh, got it. And going back to the fee switch that you mentioned about the proposal, is like the proposal that you intermediate proposed like in December, I think.
Yeah.
By like what's 5 metrics divided by success metrics and risk metrics. And when the metrics are like, I think it was like 400. I don't remember exactly the metrics.
Yeah, so there's like lifetime revenue above 250 or something, which we've definitely passed. It was like 6 bill of supply. The listings on the exchanges were kind of the final pieces that were missing, which was like we still wanted to get collateral treatment on like Binance and OKX in the same way that we had with Bybit. So what I can say is that like we're still sticking to what we said in that document, and we're trying to push through and get a few of these BD pieces like tied out. But we're very close in terms of what's sitting there now for that catalyst. Yeah.
What I was going to ask is like, after you get this, if you can like, you need like 5% of spread against USDS and over 1% of the supply in the reserves, right? And if these things float, if this like you go past a little bit and then it comes down, would like the revenue sharing stops, or would it just keep going after the first crossing?
Yeah, I think we might revise a couple of items there just so it's a bit more predictable for people going forward. So I think the piece around the reserve fund has actually been changed through time, where actually the risk committee is happy with the reserve fund being quite a bit smaller than the 1% that was referenced in there. And then I think the other piece relative to the yields, you can actually tighten that up a little bit now. I don't think that spread to SDI or USDS is actually still appropriate. So yeah, we want to try and make this a bit more consistent, where it doesn't feel like, you know, it's buying 1 week and then it stops for like 10 weeks and then comes back and randomly buys 1 week later. There's just a bit of a fine-tuning exercise, I think, that needs to take place, where there's a bit more consistency out of the whole thing. But yeah, the expectation isn't that it's like turning on and off every week. It's just like broad metrics for saying like, is growth and the rate market and stuff generally healthy or not, basically. Yeah.
Got it, man. Thanks. So when you designed the first incentive campaign, like why did you design the way you did, like with all the vestings, the conditional to keep the vesting, and like the timelines and all of these details? It's a long time, or if you remember, of course, and if you could go around the season structures, and how was like your thought process evolving when designing these things, and from like the season 1 to now?
Yeah, so I think in the first one, we wanted to just be extremely clear with the users, and I think that was something that people quite liked in the first season, which is we came out and we said, it's going to be short. This is how we're thinking about it. We don't want to attract like mercenary capital. We want people who are a bit more long-term aligned. And then we just kind of did what we said. I think everyone was quite surprised that we kind of did the first airdrop after 6 weeks, which turned out to be like 1,000% APY on dollars, basically.
Yeah, I made decent money there.
I'm good. I'm glad to hear it. So I think that built like quite a bit of trust with people, which is like not often you see people just kind of do what they say, which is an incredibly low bar to kind of clear. But the thing we wanted to just ensure was that it was a very new product, right? And there's a lot of volatility around the rates, and you know, people were a bit kind of like, how's this going to sustain itself when rates are jumping from 60% to 0 and all these different pieces? And we were learning on the job as well while we were doing it, because no one had done it at the scale that we were doing it at the time. So a lot of the sort of like awkwardness of the initial seasons was just around the fact that like we didn't want huge volatile swings of like the TVL going up to like 5 bill, then back down to 2, and then back up to 5, et cetera, et cetera. And so we were trying to like smooth a little bit of that out as people got a bit more comfortable with the product, and we as a team got to learn exactly how it sort of like fit within the ecosystem through that volatility. Obviously that sort of like changed through time now, where a lot of that stuff's just been lifted and it's just a bit more normal, I think, with people basically just getting a bit of juice on top of what they're getting normally on SUSDe. And then I think the other cool thing was that being able to like incentivize USDe holding over SUSDe meant that you could sort of appeal to 2 different types of user bases. So like the farmers who are wanting to take a bit more risk and get like tokens could express that view, but then some of the guys are like, I don't have any interest in your token, I'm just trying to get like a higher cash yield. And it meant that we could like produce a much higher yield on SUSD than was otherwise possible without that. And so yeah, I think it just allowed us to sort of cater to 2 different types of user groups in the way that we designed like the 2 token model when we came out. Yeah.
Oh, cool, man. Yeah, it was a pretty interesting experiment to watch like unfold. And on the next seasons, you said you're gonna diminish a little bit. These other token ecosystem, not partner tokens, will do. I don't know if you have this info right now. Will they like be incentive to USD and SUSD too, or will stay as ENA only?
For like the ecosystem projects?
Yeah, like the ones that you have right now, like the Terminal, Strata, Ethereum, they're all just for Ethena or the special USDe. Do you think like in the future?
Yeah, they're kind of doing both at the same time, like right now, if you think about it. So like one example here is like Strata or Terminal. They're doing Pendle pools right now where you deposit USDe and then you get their points on top. So you're kind of like, you're already getting a bit of an airdrop on the USDe side and then whatever comes to NO afterwards. Yeah.
That question was actually SUSD. So my bad.
Exactly.
Yeah, it's SUSD because USD they have their specific pools. Yeah, for Terminal, it's real. Yeah, and for SUSD, or you don't think they're not doing?
Yeah, no, we quite like focusing on the USDe piece because it just allows you to like concentrate incentives basically on one token that's coming from other projects or Ethena itself, and then it just means that we can like amplify the yield on SUSD more aggressively when we do that. Yeah.
Oh, got it, man. Thanks. And before we wrap, I have like a few more like specific questions. And at first, is which part of the roadmap are you most excited for 2025?
So I think I do think the upside for this whole institutional push is just so much larger than we can like actually imagine. Like right now, I think the pools of capital that sort of sit there and want a double-digit return on dollars. It's not 10 billion, it's not 100 billion. It's like literally hundreds of billions of dollars like want that, and it's more constrained by like how much can crypto actually absorb. So I think it's a kind of a good problem to have, which is like I don't think it's a demand side problem. I think it's actually a supply side thing that we just need to resolve and then like set up the right distribution channels. So I think just as like a gross opportunity size, that is just so enormous, and I think it's come at a very good time in crypto when there's just such clear tailwinds behind these institutions trying to get into the space and actually do more here and be more involved. And I kind of see Ethena as actually uniquely positioned to actually benefit from that whole narrative. There's not many products, I think, in the space that can actually like provide something that's completely unique that they can't access within the real world themselves. So that's exciting. And then I think the growth of like the exchanges, whether it's Ethereal and some of the stuff that I was mentioning around HIP3, I've always sort of viewed one of the killer use cases as being perp margin collateral with USDe, where you can trade derivatives and use it as collateral. And I think that, you know, I'm just very bullish on the growth of perpetuals in aggregate going forward, and having like exchanges that are built on our product like that, I think is a super exciting thing that we're looking forward to see how it plays out.
Great, man. I'm looking forward to see it too. And as you said, perps are growing. I'm just gonna dive away from that main subject right now, just out of curiosity. Do you believe perps will outgrow options among retail?
It's a super interesting question. I think if given the choice between the two, I think retail choose perps over options. But the reason that options are so popular in TradFi is that they were just never given the choice of perps, like in Robinhood. I think that's going to change. You've already seen Coinbase launch like their perps product. It's not exactly a perp in the US. And I wouldn't be surprised that within 12 to 18 months, you can start to get like perp-like exposure on equities in Robinhood and Coinbase within the US. I think when that happens, there's a very real chance that more of the trading on options on the retail side moves over to perps. So it's like where it's standing right now, it seems like a pretty out of the money or like low probability outcome. But I do think it's like the natural end state of the stuff where I don't think it makes sense that retail users are expressing leverage views, trying to underwrite like volatility and the Greeks and all that kind of stuff with options. They just want to get levered long, and that's what a perp does. So yeah.
Yeah, I think that I heard like this like a Calidra. I think the panel that you participated when we met in the permissioners talking about it. And one thing that keeps in my mind is like options more complicated, but at the same time, you have like less maintenance costs and maintenance like mental burdens. So the people just like they don't care. They just like I think it's gonna go up ape. I think it's gonna go down ape. So that's the only thing that's in my mind. But all right, let's come back to the main subject. And what's the end game for Ethena right now? What do you see as the end game for the project?
Yeah, kind of sort of getting to the numbers that we described, multi-tens of billions in size, kind of want us to be, if not the number one, but the number two, like revenue generating protocol in the entire space. And I want us to not be viewed as like a up and coming, like smaller version of Tether and Circle. I want us to be sitting at the same table, being mentioned in the same ways. And I think, I think have made the right steps to sort of get along that pathway in the first like 18 months that we've been out. But it's an extremely difficult thing to sort of like graduate from like a small DeFi project that's like an interesting sort of experiment type thing to what those businesses are, which are like, truly global, like beasts. And there's still a while for us to get to that level. Yeah.
Yeah, you're gonna get there. And man, before we wrap, thanks so much for coming. And where people can follow you, can see you and Ethena.
Yeah, I think all the main stuff is sitting on the Athena main account, so Athena_labs. Most of the updates are there. We've got links to most of what we're doing, and then we can drop my Twitter maybe in the show notes as well. It's just gdog97_. Yeah.
All right, man. Thanks. And the last two questions that I ask to every guest in this podcast. The first one is, how do you describe Ethena in one sentence?
Internet money.
Internet money. Yeah. Cool. And the other one is, I took it from the Only playbook. Give some alpha for our viewers. It can be related to anything. Doesn't need to be related to Athena or to a coin. Can be related to building and to life attitude. Like Smokey gave like life attitude advice for people here. So anything that you think can be an alpha for like the listeners.
Yeah. Not sure I'm in the position to give people life advice, but I think I think one thing I learned is that like you kind of regret in life like not taking big risks that you kind of thought of doing for a while, and I think people overestimate the probability of their own failure quite a lot and just taking a big swing at things. And if it doesn't work out, you can sort of look back and at least be proud of the fact that you did take a swing at something. But I think I was stuck in my old job for many years wanting to jump out and do something a bit more ambitious, and the only regret that I have is just not trying to do something like this like a bit earlier. So if anyone's listening to this and sort of thinking and umming and ahhing about trying to take a swing at something ambitious, I'd say just go give it a shot, and you'll learn something at the very minimum.
Yeah, for sure, man. Thanks. I think this is great alpha, and I'm very far away as successful as you, but I had the same regret as I tried to leave my old job to go full crypto. I took like 2 years. I waited 2 years more than I should, but it is what it is, man. Thanks very much for coming. Was like great conversation, and yeah, man. Thank you. You have any final words?
Appreciate it. No, I appreciate you having me on, and do it again whenever you guys want to. Yeah.
Great.